Welcome. Xero is an excellent accounting platform. It served hundreds of thousands of Australian businesses brilliantly. But there comes a point in a growing company's life when a pure accounting tool simply can't keep up with the complexity of the business. In this video, we'll look at the signs you've outgrown Xero, what an ERP system actually is, the options available, and the financial realities of making the move. I'm from the advisory team at Quantum House Australia, accountants and tax advisors. Here's our plan for the next quarter of an hour. We'll start with why this question comes up, then explain what an ERP actually is and how it connects a business. We'll go through the telltale signs you've outgrown Xero, the popular options for Australian SMEs, and the true cost of implementation. Then a worked example, the crucial role your accountant should play, the common pitfalls, how to assess your readiness, the key takeaways, and how we can help. Let's start with why this question comes up at all. Xero is genuinely excellent for small and many medium-sized businesses. This isn't a video about its shortcomings. But as a business grows, something shifts. Suddenly, you've got multiple departments that need to share data in real time. Inventory, manufacturing, CRM, HR, and financial reporting all need to operate from a single source of truth. And a tool built primarily for financial accounting, however good, starts to creak. When you reach that point, an enterprise resource planning system, an ERP, becomes the answer. It's a significant step with real cost and disruption attached, so it's worth understanding properly before you leap, which is exactly what we'll do here. And to be clear, this isn't a decision to rush. Plenty of businesses ask the question, look closely, and rightly decide they've got more room in Xero yet. So what actually is an ERP? An ERP, Enterprise Resource Planning, is an integrated software platform that manages your core business processes from a single, unified database. Finance, procurement, inventory, manufacturing, sales, HR, and more. Here's the key difference. Xero is primarily a financial accounting tool. Even with all its clever integrations, it's fundamentally about the books. An ERP treats your entire business as one interconnected system. The practical effect is that data entered once flows everywhere it's needed, automatically. No more manual re-entry between disconnected systems, and no more arguments about which spreadsheet has the right number. Let me make that concrete, because it's the heart of the ERP promise. Picture this chain. Someone in the warehouse records that stock has arrived. In an ERP, that single entry updates the inventory ledger. The inventory ledger updates the financial statements, and the financial statements update the management dashboard the leadership team is looking at, all without anyone rekeying the number at each stage. Contrast that with the typical growing business, where the warehouse has its spreadsheet, finance has Xero, and management has a third version in a board pack, and they never quite agree. The ERP gives you one number, entered once, trusted by everyone from the warehouse floor to the board report. It sounds simple, but for a growing business that single chain replaces hours of reconciliation and a fair bit of friction between teams who each thought their version was the right one. So how do you know you've outgrown Xero? There are some classic signs, and you'll likely recognize a few. Your staff are maintaining parallel spreadsheets because Xero can't hold the data they actually need. You've got complex inventory, multiple warehouses or locations. Your manufacturing or job costing requirements have outgrown what Xero handles natively. You need multi-entity consolidation across several Pty Ltd companies. Your reporting requires complex intercompany eliminations or multi-currency consolidation. Or you're simply bumping up against the transaction limits and reporting depth that Xero handles efficiently. If 3 or more of those ring true, it's genuinely worth assessing whether an ERP would pay for itself, because the cost of all those workarounds is real, even when it's hidden. If you decide to look, the good news is the market has matured, and there are strong options at every price point. MYOB Acumatica, which, by the way, was renamed from MYOB Advanced in 2024, is built for Australian and New Zealand mid-market businesses, with tight local payroll and GST integration. NetSuite, owned by Oracle, is a cloud-native ERP that suits businesses from roughly $5 million up to $100 million in revenue and beyond, with strong financials, CRM, and inventory. Microsoft Dynamics 365 Business Central is a capable mid-market ERP with deep integration into the Microsoft ecosystem. And SAP Business One targets manufacturing and distribution businesses in particular. The right choice depends heavily on your industry, your complexity, and the specific modules you actually need, not on which vendor gives the best demo. A word of caution though, don't shop on price or brand alone. The cheapest license can quietly become the most expensive project if the system doesn't fit the way you actually work. Now the part vendors are sometimes quiet about, the true cost. ERP implementations are frequently more expensive, more time-consuming, and more disruptive than the initial estimate suggests. The software licensing itself typically runs from around $500 to $3,000 plus per user per year for a mid-market ERP. But that's just the start. On top of it, you've got data migration, process mapping and configuration, staff training, integration development, and post-go-live support. For a medium-sized business, a total implementation cost of $100,000 to $500,000 is not unusual. None of that is a reason not to do it, but it is a reason to get a detailed implementation proposal from an experienced consultant and to go in with your eyes open. And, critically, to include your accountant in the process from the start. Let me bring this to life. Picture Lumen Wholesale, a fictional homewares distributor that had grown to around $12 million in revenue across 2 Pty Ltd entities and 3 warehouses. Xero had served them well for years, but the cracks were showing. The warehouse team were keeping stock levels in their own spreadsheets because Xero couldn't handle multi-location inventory the way they needed. Month-end consolidation across the 2 entities was a manual, error-prone exercise that took the finance team the better part of 2 weeks. And nobody quite trusted that the management dashboard matched what was actually happening on the warehouse floor. They were profitable and growing, but flying on instruments that no longer agreed with each other. Now here's what they did right. Rather than let an ERP vendor lead the process, they brought their accountant in at the very start. Together they defined exactly what the finance module had to produce: multi-entity consolidation, intercompany eliminations, audit-ready reporting, reviewed 3 vendor proposals against those requirements, and chose the system that genuinely fit, not the one with the slickest demo. The finance module was configured correctly from day one. Within a few months, warehouse data flowed straight through to the financials, month-end dropped from 2 weeks to 3 days, and the leadership team finally had a single source of truth. Illustrative, of course, but it shows why the accountant belongs in the room from the first conversation. The striking part is that nothing about the business was actually broken. It was simply being run on systems that had quietly stopped talking to one another. That case study points to something important: the role of your accountant in an ERP project. Your accountant shouldn't be an afterthought, brought in once the system's chosen. They should be a key participant from the start. Here's why. The ERP's financial module will become your system of record for your management reporting, your audit trail, and your tax compliance. If it's configured incorrectly at the outset, you'll be living with bad data or expensive rework for years. At Quantum House Australia, our outsourced CFO team helps businesses through ERP selection by defining the financial reporting and compliance requirements the system has to meet, reviewing the vendor proposals against them, and overseeing the finance module implementation so it produces accurate, audit-ready data from day one. A few pitfalls to steer around, because ERP projects have a reputation for going wrong. The first is letting the vendor lead, choosing the system with the most impressive demo rather than the one that fits your actual requirements. The second is under-budgeting, treating the license fee as the cost and being blindsided by migration, configuration, training and support. The third is poor data migration, because if you carry messy legacy data into a shiny new system, you've just built a faster way to be wrong. And the fourth, the one we care about most, is misconfiguring the finance module, Get that wrong at the start, and your reporting and audit trail suffer for years. All four are avoidable with the right preparation and the right people in the room. Before you commit to anything, do an honest readiness assessment, and there are 3 things to look at. First, your current systems. Be clear about what's genuinely failing today versus what's merely inconvenient. Second, your growth trajectory. Where will the business be in 3 to 5 years, and what will it need then? It's worth choosing for where you're going, not just where you are. And third, the specific functional gaps, the concrete capabilities an ERP would give you that Xero genuinely can't. Get clear on those 3, and you'll either have a strong, well-justified case for an ERP, or you'll realize you've got another year or 2 in Xero yet. Either answer is a good outcome, because it's an informed one. And whichever way that assessment lands, you'll have made the decision deliberately, with the facts in front of you, rather than reacting to a polished sales pitch. Let's pull it together. An ERP unifies your whole business in a single database. It's a different kind of tool from Xero. Watch for the signs you've outgrown it. Parallel spreadsheets, multi-entity consolidation, complex inventory. Know the main options: MYOB Acumatica, NetSuite, Dynamics 365 Business Central, and SAP Business One. Budget for the true cost, not just the license fee. Involve your accountant from the very first conversation, and assess your readiness honestly before you commit. Get those right, and an ERP becomes an asset, not an ordeal. This is where Quantum House Australia comes in. We work alongside growing SMEs to assess ERP readiness, define the requirements, and support the financial side of implementation. In practice, that means we assess whether you're genuinely ready and define what your finance module must deliver. We review vendor proposals against your real requirements rather than the demo, and we oversee the finance module build so it's audit-ready from day one. And because moving to an ERP often surfaces bigger questions, multi-entity group structures, tax compliance across companies, we can draw on our colleagues at Australian tax experts, tax advisors and lawyers, so the accounting, tax and legal advice all sit together in one place. The aim is simple, that you choose the right system for the right reasons, and that it produces clean, reliable numbers from the very first month. So the question to leave you with: are you starting to feel the limits of Xero? The spreadsheets, the slow month end, the numbers that don't quite reconcile? If so, the worst thing you can do is let a software vendor make the decision for you. Quantum House Australia helps growing businesses assess ERP readiness, define what they really need, and get the finance side right from day one. Visit quantumhouse.com.au or call our Sydney office on 1300 809 697. Thanks for watching. Quantum House Australia, accountants and tax advisors, setting a new standard.